If it happens, I speculate that all assets, all crypto assets would appreciate overnight by 10% because it would signal the move for policy.
In today's video, Canadian businessman and entrepreneur Shark Tank star, known as Mr. Wonderful Kevin O'Leary, updates about the crypto market, his take on Bitcoin and where we are headed next in the crypto space. He also speaks about his thoughts on stablecoins, and why regulation is very important for the cryptocurrency industry to thrive in these volatile times, and urges investors to protect their assets moving forward while the suffering unfolds. Please let us hear your opinions in the comments section. Let's dive into his last interview now.
Let me qualify my statements on this because I'm an investor in JP Morgan as well. I have a lot of respect for him. He may be one of the most successful banking managers in the history of that sector. However, that was an uninformed statement. And it was not helpful at a time when we're trying to drive regulation through two different bills on the Hill right now. I, along with many other private investors, have been spending a lot of time in Washington on this. Essentially what Jamie said there, he was talking his book. This is my interpretation. He feels threatened by some of this technology, particularly around payment systems, because banks make money transferring assets. It's a cost of friction in the system. And one of the only reasons that I invested in Circle, and I'm an investor in Circle, I'm supporting their initiative, and I'm a big believer in what stablecoins can do, is it's time to get rid of that friction. And it's not important that banks be protected so that they can make fees from that friction. When you transfer the US dollar into the Swiss franc to buy Nestle on the Zurich exchange, these banks add zero value. There's no value created in ACH transfer fees. If we could use a stablecoin that was regulated and approved by both sides of that transaction, it would be more transparent, it would be much faster, it would definitely be more productive, but above all, I would save millions of dollars. And so would everybody else. I can't wait till we can do that, because that kind of innovation should be supported, and it is. And that's why we're all here. This isn't about, speculation on asset price. This is about reducing the fees of how the world's economies work. More transparent, more productive, completely auditable, regulated, but less expensive. So does Jamie Dimon feel threatened? You're damn right he does. That's a big part of how he makes money. Too bad.
In countries like the Philippines, where they have 70% of adults that remain unbanked, these are not JP Morgan clients.
Right.
These are people who are transferring their dollars back to Philippines with remittances up to 17%. This is what USDC, stablecoins, crypto can potentially unleash.
Yeah, there is a social mission here. That is a good thing, but it is not going to solve a different problem we have right now. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stablecoins and Bitcoin and all the projects and Ethereum on down and Polygon and Miston and everything that's coming, the truth is that none of it is owned by institutions, zero. And so everybody likes to say, yeah, that's not, but sovereign wealth and pension that I service in the indexing business, and there's many people do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, it would definitely be some Bitcoin, there'd probably be some Ethereum there, maybe some Polygon, maybe a little Solana, whatever they want to do and what indexers would do for them based on market capitalization. That's $1 trillion worth of demand. But none of it is going to happen until we get some policy. And the truth about this is, and I'm happy to just say it the way it is, there are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. The UAE, Switzerland, France. But the real money, the sovereign wealth capital, is never going to move against the SEC. Never going to happen. And the reason that occurs is that if you're a sovereign wealth fund or a country that's oil rich perhaps, you're generating $250 million every 12 hours. The only place on earth you can put that is in the S&P. The only way you can do that is being compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules have been determined. So we are being kept out of institutional capital, and Bitcoin is not going to trade above $22,000 until we get policy. Interestingly enough, and this is a personal speculation, if this stablecoin transparency bill was passed first before the Digital Commodities Act, which is the other big initiative right now, and Jeremy, wherever he is, was the guy that got that done, it'd be like bringing Led Zeppelin back, and he would be the lead singer. Because if that happens, and if it happens, I speculate that all assets, all crypto assets would appreciate overnight by 10% because it would signal the move for policy. So we should all support the initiative of everybody, you know, and there's other people involved in this. You shout out to Sheila Warren and Perry Ann Boring, who spent countless hours educating legislators on the Hill. Their missions are important, but there's a lack of knowledge with the government that we have to get over this hurdle. So even if just stablecoins, that one thing got policy. And remember, when I go up there, I keep telling these guys, it's just software. It's productivity software. It's not scary. If you buy Microsoft for your office and you're typing on Word, that's software. That's a productivity tool. A stablecoin is just software that allows for more productivity and transfer of assets at a much lower cost, much more productively.
Let's be candid, though. That race to want to figure out stablecoin regulatory clarity came after Terra Luna crashed in May, wiped out $60 billion, and really created a lot of distrust in the market. When you need people, the mass, the regular folks, who are actually using stablecoins in ways that we can only imagine here in the United States. This is a very mature market. We are all well served in this developed market, but the rest of the world really needs these tools.
Yeah,
but how do they trust it?
Sure. So I think the better way to look at this, I think, is the Luna crash, the other companies that were lenders that went bankrupt. In a way, you should look at that optimistically, because what's happening here in this last 9 months is we're scraping the patina and we're removing the idiot management teams out of the market. All these bankrupt ideas will not come back because they were tested and they didn't work. And that's an important way to build a nascent industry. So it's the litigators will litigate over the assets and the lawyers will sue everybody, and that's okay, because now the remaining players are being strengthened by the fact they're still in business. They're able to raise capital to the extent they're doing that, and the idiots are gone. What's wrong with that? And I think we start now, even though we're in a crypto winter, at a much better place. And I think the fact that they even woke regulators up, you know, when you lose $60 billion, mind you, it was decentralized, so a lot of it was outside of the US, that's maybe good.
That's a good thing.
And look, you got to feel sorry for the pioneers that got the arrows in the back, but they were idiots, so that's okay too.
Are we going to see movement before November 8th? That's the question. We're all waiting. What's the bet?
I think it's, you know, it's a great question, and I asked the same question to, I think those women are in different places. I mean, Perry Ann is more negative than Sheila. I saw them both within an hour of each other, and I got two different stories. So and they're the closest to it in the sense that they spend so much time. We had an opportunity 48 hours ago to have the bill go to markup. I'm talking about the Stablecoin Transparency Act. It didn't. That's negative. I know Jeremy's optimistic that it can get there in October. I hope he's right. We have a bit of a distraction, midnight November 8th. We don't know if the House will flip or what's going to happen with the Senate. It's a coin toss. Maybe this policy has to happen after the midterms. But the whole investment premise of investing now is that you feel, and I'm now speaking, categorically, I've put money in harm's way in crypto across now almost 50 projects and continuing to do so every week because I'm in the camp that says in the next 12 months, something's going to break on policy. I think it's going to be the Stablecoin Transparency Act first, but that in itself should open the floodgates because if you ask a big, let's just take a big Middle Eastern bank, I don't have to name the names, but they've got 5 million accounts with over $2 million in each one. And they want to just have access to a stable coin, Bitcoin, and one chain. And they want to offer that to their clients. They won't do that until there's regulation.
There's no compliance infrastructure at the moment.
And they are getting ready for that to happen. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be. As an indexer, I put up to 20% in a sector. So just like I would in energy or just like I would in tech. So why not position myself now? I'm not going to get it right. It's volatile as hell. And some of the stuff I've invested in is going to zero, but not all of it. And so I think I'll do quite well.
It feels pretty bad. Why are you bullish? What are the bullish signs that you're seeing?
I've seen this movie before. The time to be putting capital to work is when there's blood rushing through the streets. And that's happening in crypto right now. All of these bankruptcies, defaults, changes in management, it's a cleansing that's going on. It's a very difficult time to fund new projects, and any valuations that people thought they were going to get 4 months ago are being cut in half, sometimes down 60%. But the good ideas, and the way to look at this, in my view, and I'm fortunate, I spend a lot of time teaching graduating cohorts of engineers, MIT, Waterloo, Temple, wherever they are, Harvard Business School guys. When you meet those cohorts, a third of the class are entrepreneurial. And so I'm doing this selfishly. I like to see their projects before the VCs do. So I'm sitting in the class and we go out for beer afterwards, whatever. Here's what I've come to. I've come to this realization. If you ask them where they want to work, these are the brightest men and women on earth. To get into MIT, you basically need a perfect math score. They don't care what country you were born in. You've got to be the best of the best. And some of those dudes are very eclectic people, I have to tell you. But they don't want to work in manufacturing anymore. They don't want to work in the existing 11 sectors of the S&P. They want to work on the chain. They believe that the biggest opportunity for them personally is to work in this nascent space that, and the analogy would be back at the beginning of the internet when only pornography was streamed. That was it. We're at that stage now, and so my argument is to any investor, you can't pour that much intellectual capital into a space and not expect extraordinary outcomes, because those are the people that are going to redefine industries using this technology. I believe that, and I invest in them. And that's why it's good to put money to work now, because every day another cohort comes out. Remarkably, we're doing some pretty stupid things. We're throwing them out of the country. They should stay here, but they go and work in the Caribbean islands or the United Arab Emirates, wherever they can go to. They're the best of the greatest and the best, and we kick them out, but that's nuts. It's a different problem. But the investment thesis is you go where the intellectual capital is going. That's why a 20% allocation to crypto at this point, at these prices, is a very good idea. Now, I will say there's capital still going into Bitcoin miners because they're getting awarded coin at 7,000 to 8,000 if they have scale. So it's still profitable, but nobody will fund the early miners that used carbon-based electricity. So those guys are screwed. It's too bad. But the new projects are ones that are using hydroelectric in places like Norway or solar or so there's still places for capital to go to work. But there's a pause for policy. And it's never has the anticipation been higher than it is now. Everybody is getting bored with the status quo. And the US has to wake up and get its poo-poo together and start regulating this stuff. So I'm not in the camp that says we need to placate, the original founders of crypto and decentralize and let's fight the government. Screw all that. We know that that's not going to work, and we know that no one's going to make any money if that's the case. That's a bad outcome. The better outcome is regulate the applications on the chains that should be regulated. The policy exists for some of it. Put policy out on stablecoins first. I hope that we consider Bitcoin and other token-based opportunities commodities. If there's, if we're going to fractionalize NFTs, maybe there are securities. There's all this stuff. But right now, what we have is turf wars. Turf wars between the regulators, openly declaring turf wars with each other. Right this morning on CNBC. No, it's my domain. No, it's my domain. Of course they want to control it. But at some point, the role of the Hill and Congress is to decide, make a decision. It won't be perfect. In the case of stablecoins right now, what held up that bill were the states. They're not happy. Well, tough. We got to get this thing done. And we got to move on. And we can tweak it, but it's very frustrating at this point. And I think I speak for a lot of people the same way from the institutional side. It's time to get our act together. We're going to keep losing talent. People are going to go work, on some Caribbean island, not where they should be in the United States. This is very important stuff, and we shouldn't be losing our talent because we can't regulate it. That sounds dumb.